What's going on, traders? Welcome back to our channel. We are still on elementary. We have considered support and resistance. The first one we have considered Japanese candlesticks, and now we're about to begin grade 3 Fibonacci. How is the trading day going? How is activities going? Today is November 4th. Let me just refresh this real quick. Elections is going on currently in the United States. Tensions are high, and these results are out temporarily. Joe Biden is leading 224 to 213 for Trump, and we can see the blues. They indicate places where Joe Biden is having most of these votes, and the area, the stronghold that Trump is holding, is indicated by the red. Okay, so we can see it's almost a tie, 224 to 213, right? And if you haven't watched that video, we will analyze that gold is going to drop. It has been dropping already, and also EU is going to drop. Okay, before the elections, we did this video. I'm going to put a link in the description on this video. Go check it out. Okay, so this is what is currently going on. I just thought I should tell you, just feed you guys. So for us to begin Fibonacci, let's roll the intro and we'll come back to the screens. So here we are on grade 3 Fibonacci, and we have Fibonacci trading, how to use Fibonacci retracement, Fibonacci and all that. So it's a lot of content right here. So like we have been doing, we'll go through this course right in detail and also as fast as possible. So let's begin with the first one, Fibonacci trading. What is Fibonacci trading? Okay, Fibonacci was introduced by a man called, it was invented by a man called Leonardo Fibonacci. He came up with these mathematical numbers of adding one number to another and then having a ratio. So what are the numbers? Okay, he developed this concept 0, 1, 1, 2, 3. The idea is that if you add 1 plus 1, you will get 2, right? And to get the following number, you add 2 plus 1 plus 2 to get 3. And that's how he came about all these ratios and these numbers you see here. And after a while, right, he developed these numbers and ratios measuring up to 0.618, and you also have 382 and all that. So there are a lot of numbers, okay, with this which Leonardo Fibonacci he invented, and how to use these levels in sequence order to be able to determine ratios and levels that the market will get to. Okay, so that's basically the idea behind the Fibonacci retracement levels. They are used to determine areas of where the market will retrace to, and areas in the market where prices will also extend to. Okay, so the most commonly used retracement levels, they are the 0.32 236, 0.382, 0.618, and 0.764. okay, and then there is also the 0.34 extensions level, 0.382, 0.618, 0.1000, which is 100, 1.382, 1.618. So these are the extensions levels. Okay, so what is important right here is that you don't need to know how to calculate these extension levels and retracement level, because they automatically have been calculated and programmed into your charting software, that is your MT4. Okay, however, what you should know is that many traders use these extension levels and retracement levels to determine where price will probably move to. If it's in the retracement levels, where price will probably retrace to before continuation, and also they use the extension levels to determine levels of the market where price will move to in order for them to take profit. So traders have been using these levels as potential support and resistance area, okay, and also levels for taking profit, like we have just said. So in order to apply these Fibonacci levels to your chart, you need to identify the swing highs and the swing lows, and that is what we're going to dive into real quick. So let's continue rather by discussing how to use the Fibonacci retracement levels. So how do we use the Fibonacci retracement level? The idea is to go long or buy in a market at a Fibonacci support level when the market is trending up, and also to go short on a pair on a retracement level when the market is trending down. So you go short on a Fibonacci retracement level, right, when the market is trending. So the idea is that prices will continue on a new trend after it hits a Fibonacci retracement level, or after it retraces to a particular area or level in the market and continue in the opposite direction. Okay, like something like this. If prices was coming from the upside, so if price was, coming from the downside, okay, say making higher highs and higher lows, higher highs, higher lows, higher high, higher lows, okay, price would always come back down, okay, to create the higher low before moving up. Now this is called the retracement level, or the pullback, that area whereby price will fall back to before continuing its momentum. Now you can use the Fibonacci retracement, the Fibonacci, to determine how far, right, to try to predict how far this movement will be or will take. Okay, so that's basically what the Fibonacci retracement levels are used for, to determine how far price will fall back, either in a swing high or in a swing low position. Okay, so let's look at this chart. This is AUD daily chart. Okay, well, the example we have here, the Fibonacci retracement level was taken from the swing low and drawn to the swing high, okay, from the lowest point to the highest point of the trend. And you can see from the side here, the price area is right here. There is the 0.236, 382, 500, 0.618, 0.764, and 1.0. Okay, and there are different price levels that has been, written beside them, where prices will likely retrace to before continuing its upward momentum. Okay, and from the chart we see price tends to drop down a little bit to the 226 area. So let's continue to see what we'll learn further from this. Now from the graph that was plotted, right, let's examine it. Okay, this is how the Fibonacci works. Okay, you take we'll set it all, put the swing low to the swing high. Okay, and let's see this other chart from the swing low to the swing high. Now where did the price retrace to? We can see clearly that price, okay, fell after the swing low to the swing high. Price fell, broke the 0.236 level. It found support there. Price rose back up, came back to test it again, and it also bounced back off again. And finally, it came back to test the 382 retracement level, and this is where price held. Price was unable to move further. So you can see that this level 0.382 is a very strong retracement level. Price always come to this area and store there before finding its momentum back. So this movement that you have, from this high to this low here is called the retracement. Okay, it retraced before it continued back up. Okay, so that is the essence or the meaning of retracement, and many traders use the Fibonacci tool to determine this. And then for an uptrend, okay, for a downtrend, if you want to determine the retracement level, you just draw the Fibonacci tool from the swing high to the swing low. Okay, mark out the levels you have and see where price will retrace to. During the uptrend, price retraced up to 0.382, right? So in this downtrend, let's look at this chart. This is the Euro USD 240 minutes, okay, to see where price will retrace to in this situation. Now in this scenario, price retraced to the 236 level, broke it, rose up, 382, broke it, and also went to test the 50.50 retracement level, and this is where price stored. Okay, the seller stepped into the market. You can see this candle is stored. It's fit to push up, create more bullish momentum seller stepped into the market, this huge engulfing candle, and what do we see? Price fall back down. Okay, so in this scenario, the earlier on price held in 382 area, right? But in this scenario, price held at 0.50 retracement level. That's where price held. So this is how traders use the Fibonacci tool to determine retracement levels and also extensions. So how should we understand this? That these are areas or levels where traders use them to determine where price will stall, find resistance, or if it's an uptrend, find resistance, or if it's a downtrend, find support, right? And then if in a downtrend, find resistance before you continue the momentum down. Okay, and we just have to know this. However, can we just base our trading decisions alone on the Fibonacci retracement levels? No, it will kill us if we do that. It will fail us. It doesn't always work like that. So let's move on to the Fibonacci retracements that are not foolproof. So in this section, Fibonacci retracements are not foolproof. Okay, it's telling us, well, basically saying you can base your trading decisions alone on Fibonacci retracement levels. Even though you plot your graph very well, right, you draw the levels from the swing high to the swing low, you cannot depend on it alone. And we have an example here. We see from the swing high to the swing low. Okay, let's determine the retracement, and you can see price has been retracing, okay, to the upside, and it looks like the 50% retracement level is holding. You can see price is stalling in this area, okay, according to this example we have. However, they did continue to hold. Let's look at this next chart. What happens thereafter? It held for a minute, but look at what happened. Price broke off this level, okay, and price just continued up. So if you had placed a sell trade here, what will happen? You would have been stopped out, and price will just continue to rally up and come back down to this 618 level, held support twice, okay, and continue up and up. Okay, so you can't just use the Fibonacci retracement tool on its own to determine areas of support in an uptrend or area of resistance in a downtrend. Okay, they are not foolproof. We can't do that. Okay, so let's see how we can use Fibonacci retracement levels with support and resistance. You know, we learned that earlier. Okay, support and resistance. Okay, so how to use Fibonacci retracement with support and resistance. So support and resistance levels, we know those are levels where prices are, if it's an uptrend, the resistance level is where prices will possibly, right, probably meet friction in the market. Price will find it difficult to break above those levels. So it is important for us to be able to identify our support and resistance levels before we take our Fibonacci retracement levels to those areas and then see how price reacts. So here in the chart of the USD CHF for the weeks, what do we see? We can clearly see price has been riding from the downside, upside to the down, and found resistance here. However, price continued from the swing low, okay, and rode all the way up to this level, created a new high, and it's trying to bounce back down. So what is happening here? Presently in this chart, it is stalling at this 0.236 levels. Did it continue to hold, or it fell back down? Let's look at the next chart to see what we can learn. Now, prices was unable, after creating this new high, to push back up. Okay, now where is our previous resistance? Look at this line here. Okay, from this downside move to the upside, price retraced, found resistance here and fell back down. So this was our previous high, okay, which is also our resistance. Now price came from this low and broke the previous resistance, which is here, broke it and traded up. Okay, so it created a new high here. However, remember we have our previous resistance here, so you can draw your previous resistance here and try to see if price will fall back to this level. So what do? Having drawn your previous resistance line here, okay, you can then take your Fibonacci resistance level from the lows to the high, wash it with your resistance level. Okay, put these three factors into consideration. One, resistance turns support because price is now coming down from this up resistance level to the downside. So will it hold here or no? Okay, so let's look at the chart next to see what we have. In the next chart, okay, we can see clearly that price broke. Okay, I mean it hit a resistance here, created a new high, okay, from below, and this was our first resistance number 1, resistance number 2. Okay, so price was unable to break this resistance here and came back down and found support here. Previous resistance to support, found it here once, again, twice, and the third time. So if you combine the Fibonacci retracement level from the swing low here to the swing high, okay, and support and resistance, and see what price is doing in the areas, if you find out that price broke the 0.236 here, okay, this level, it also broke this 3.82. okay, however, in resistance to support here, it is stalling. Price is currently stalling, okay, and you cannot begin to say, okay, let me watch, okay, have one confirmation if it's going to hold or break it as well. This is the 50% level. However, price found support, rose back up, came back down to test it again, even tested it deeper, but it was unable to trade lower, and price bounced back up again on this level. You can say, well, good, this level is a strong level because previous resistance to support, the Fibonacci retracement level is telling me that prices is failing to break this 50% level, and if price will come back down again to test it, you can add all this together at your conference of strong confirmation to say, okay, I have strong chance of winning this trade if I take it because price is unable to break this level. And if you place a trade here, guess what happened? You would have been in loss of profit because price bounced off this resistance to support and the 50% retracement level. Okay, so that is basically how we can combine support and resistance with our Fibonacci retracement levels. These are areas whereby traders have their eyes on, they have their eyes glued to these levels. Okay, and so if you take your trades in those levels as well, you have a very good great trade in your favor. Now let's also learn how to use Fibonacci retracement levels with trend lines. Okay, how do we combine trend lines with our Fibonacci retracement levels? Look at this chart. This is AUDJPY. Okay, we have a trend. Okay, we know how to draw a trend line already, so we have a trend line and we can see the market is bouncing off the trend line. Okay, so how do we combine our support and resistance level to Fibonacci, support, resistance level, trend line, and all that? So we have in this scenario the trend line. Okay, so look at the example we have here in this chart. See how price has been bouncing off the trend line. Okay, creating a new high. So where is our swing low? Swing low is the lowest low, higher high, higher low. Okay, so this is our swing low and this is the swing high. Now I have drawn the support, the Fibonacci retracement level to that point. Okay, what did price do? Price trend to break back down. Okay, retracing back down because it will definitely create a higher low if we continue. So we do not know how low the higher low will be. We do not know the extent which it will be. However, that is why we are using the Fibonacci retracement level to try to determine how or what areas of the ratios the price of the market will retrace to before we take our trade. Okay, so we have our eyes on 0.50% levels. Okay, that's what the chart is telling us. Why? Because if you look at it very well, very close, this is the 1 minute hour candle, 1 minute hour candles. Okay, 1 hour candle. You can see price moved slowly, came back down. Look at this red candle here. Okay, it found mini support here, and look at this long huge candle here. Okay, so this is the area whereby price found friction before it moved up to create this new high. So if we take our swing low to our swing high, we can see price will probably come to this area again. This is not always the case. Nothing is perfect in the forex market, but what happened? Price actually did that according to the example we have on our chart. Price did that. Price rose this new high after having joined the swing high to the swing low. Price came back down to the 50% levels and held. Remember this candle we talked about the other time, right? Price held in this level, found strong support here, and price zoned off again. So if we actually take our time to make it a practice, right, how to use these fib levels, you'll be able to see that you can combine support and resistance line, okay, swing high and swing low, okay, the trend line, to be able to determine good areas or levels in the market where you can take a trade. Okay, so let's move to the next lesson: how to use support and resistance levels, how to use the Fibonacci retracement with Japanese candlestick. So we now know how to use the Fibonacci retracement tool with support and resistance, and how to combine it also with our trend line. However, that's not all. If we add if we include how to use it in combination with also Japanese candlesticks, we can have the odds in our favor. So let's look at another example. Over the past week, when you came to a trade and you open the chart and you see price has been trending for the past week, okay, this is the swing high and this is swing low, it has been trending to the down, okay, and so you drew your swing high and swing low, and you have your Fibonacci retracement levels, and you have these levels in the market where price will able to retrace to. So where do we take our trade? What do we do? Well, it's a Friday, it's been the past week, right? So it's a Friday, you don't trade on Fridays, you just try to watch how market conditions will play out, okay, over the weekend. And so since you decide to chill off, what happened? Okay, price zoomed off, broke the 2.36 level, also broke the 382 level, also broke the 50% level as well, and there's a very huge bullish engulfing candle, okay, right there in the area of 0.618. So what will you do? How do we trade? What do we do, right? Since we are seeing all of this, can you buy the market slightly because of this bullish candle? Not at all, because you know it's already bullish. Okay, you don't buy the highs, you buy the lows if you're in an uptrend. So you play out, you just chill, you just watch to see what happens. Since you know price has already broken the 50% level, anything can happen. It might come down this level or not. Okay, so you're waiting to see what happens next, and all of a sudden, after that big bullish candle, the next candle that came up was a doji right here, still on the 618 level, and well, you're still watching, okay. But what did we learn earlier on? When we see a doji form like this, what is this candle telling us? And remember, the very previous candle that came before this doji was very bullish, very, very bullish, okay. And from the back of this bullish candle, we can expect a more bullish candle to form next. But what do we have? A doji. It means that the bullish pressure has depleted, okay, no more bullish pressure in the market again. Can we expect a reversal? Certainly, yeah, okay. So we have the 50% is broken, we have the 618 right there, and we have a doji, okay. Now what should we be expecting? What can likely happen? Okay, and the subsequent candle that has opened, that came up again, was a further bullish, almost looked like an inverted hammer, okay, inverted hammer to the top side, more bullish, more bearish pressure again. And what happened? Still in the same area, this level, price fell down. So if you want to take a trade, having seen all this form happen here and price fell down, you can begin to say, okay, I'll look for an entry. So you can scale down to lower time frames, but this is just an hour time frame, and you can take a trade here or here or here. What happened? You would have been in profit. But it's easier said than done. It doesn't always work like that in the live market. So we always have to take our time, be able to have more confirmations on our side before we take our trade. So that is what happened. Price tumbled down, went back to the previous swing low. Okay, so if we combine our knowledge of the candlestick patterns, okay, and Fibonacci and trend lines, we'll be able to come out more profit. So how can we use Fibonacci extensions levels to take our profit? It is not difficult to do. once the market has, look at this example here, once the market has created, given us a formation, what to do is to take your Fibonacci level, draw it from this swing high to this swing low, okay, and the levels will come up to this upper side. So with that way, you can be able to say, okay, I will pick any of these levels once it has reached any one I like. Okay, that's how to use the Fibonacci extension level to take profits in the market. Okay, as you can see here, that is how it is. So what else do we have to do here? This is for the example of what we have just discussed. Looks like more buyers are in the market. Okay, let's move ahead. Taking profit. Okay, so taking profit. Let's just look at this one. You can draw your fib from this high to this low. Okay, and the extension levels will come like this, and you can pick one of these levels to take your profit, because there are areas whereby market will find support, potentially either move to the upside or continue to the downside. That's exactly how it is in the market. We're going to go to our chart very soon to look at how to do that. So how to use the Fibonacci to place your stop, your stuff, so you don't lose more money. We can use the Fibonacci to place our stop loss areas. Okay, like this is the swing high, this is the swing low, and we now have the areas in the market already. So if the market is going to fall back down from here, right, you can place your stop loss in this level right here. You can place your stop loss. That is if the market will continue from the downside like this. Okay, but actually we do not know that, but not until it happens, and we'll have more confirmations to our side. So the 50% levels are usually great areas where many traders place their stop loss. Okay, here or here, and that is just basically what many traders do. And if you do that, well, you might come out victorious, or sometimes you might lose some trades. But placing a stop loss is very, very essential. So setting a good retracement levels to place your stop loss can give us more confidence that that support or resistance area will hold. Another method too is to place your stop past the swing high or the swing low. Okay, so this is the swing high and this is the swing low. If you're going to enter into a trade and you put your stop loss here, okay, there's high chance the market will never get up to that area. Okay, but there's another thing to consider also, your account size. What if the market continues to trend up? Okay, go up. Will your account be able to hold it? Will you be able to hold it? Would your emotions be able to hold it? With your side, will you have the mental strength enough to hold your trades? There are a lot that comes to all this when we're in the live chat. Okay, so which way is a better way? There's actually no better way. Okay, but you can tilt the odds in your favor by combining all these tools. Excuse me. All these tools we have discussed about, and could give you a better exit point, okay, and have more rooms for your trade. Okay, so in summary, what have we learned? In summary, we have learned that you should keep your eyes on these areas of the Fibonacci retracement levels. Okay, these areas, they are very, very powerful areas in the market. The most important Fibonacci levels are the 38.2 and 50%, 61.8%. okay, for the extensions and retracement levels as well. So that is all we'll be having. But before we close this trade, let us go to the live chart. So here we are on the chart. Okay, we are trying to let's practice to use the Fibonacci retracement levels. Okay, so this is the daily time frame. You can choose whatever time frame you want. It's the 4 hour, but let's just use the daily time frame. Okay, this is just an example for you to know how to use the fib levels. Okay, so we have our swing lows right here. Okay, to this move upside, this is our swing high. So this is our swing high. How do we know the length of this movement to the upside? How can you determine that this move to the upside? How do you determine that with your Fibonacci tool? Okay, so once the market has come, pulled away from this high and created a support right here and a new lower high rather. Okay, and the very first candle to the upside will tell us that the market is about to move to the upside. So this is the very first candle to the upside. Excuse me, I have just black candle colors alone. Okay, in this chart. So this is very first move to the upside. So we can draw a swing Fibonacci level from here to here to determine the extension. Okay, it has retraced. This is the retracement. Okay, now to determine the extension, we can draw from here to this point to know how far it will go. So let's take our Fib tool and draw from this high to this low. Okay, so what are the extensions we have? We have 236, 382, 50%, 618, 100, 1618, and 2618. So remember, this is an extension. Okay, for the extension, it is used to determine where you are going to take your profit. Okay, so you can decide to take your profit anywhere. Here is a good place, here is a good place, and this is almost a swing high. And you can see in this level right here what happened. Price, you know, continue to trade in between these levels until they fade back down. So if you took a trade here, or let's say a buy here, okay, and the price rose from this low to this high, why now? That's a great trade. However, this is the daily time frame. Okay, let's go to 1 hour time frame and look at what we can do. Okay, let's just use this lows as well to determine. Let's do a swing, a retracement level. Okay, now to do a retracement level, we'll draw from the swing low to the swing high. Okay, and see where we retrace to. And beautiful, very beautiful to see is that price retraced to the 382. Look at it here, the 382 fib levels, and it held here, and price rose back up. It came back down again, but it couldn't reach the 382. So what will this tell you? You can see, okay, good, because 382 is holding, price is failing to get to the 382. You can take a trade anywhere here. Okay, so that's basically how to do that. I'll post advanced videos on how to use the fib retracement levels and how to program and format them, but this is just an example. You please do your own what is it called, practice section in your own time, and also remember to incorporate how to use trend lines, okay, and how to use candlestick formations, okay, that we discussed earlier on. Okay, all these are important. Okay, and see we have almost a tweezer button here, and yeah, that is just how it is. Okay, so I hope you find something interesting, or you learn something new from this grade 3 of our Fib retracement, Fibonacci tool, how to use the Fibonacci tool. So friends, traders, you will not be able to comprehend everything at once, but if you have learned something interesting, if you have a question, please drop it in the comment section. If you learned something interesting right here, especially how to use the Fibonacci retracement tool, please smash the like button, subscribe if you haven't, and until next time, I'll see you again when we discuss the grade 4 moving averages. So do well to stay tuned and watch the other courses. Please smash the like button, subscribe, and until next time, take care.